Today is Thursday, January the 31st. The McClellan oscillator continues its dance on either side of the neutral line, and it's been like that since the beginning of January, since way into December, as a matter of fact. So we're just really not going in any particular direction. The S&P, after hitting a record yesterday, pulled back, but still managed to keep a 1 point up on the previous day. So I guess that qualifies for another new high. Apple, on the other hand, had an amazing day. Let's just take a look at the daily chart. And this is using something in motive wave that they call RSI bars. And RSI bars have their limits at 30. So if the stock's relative strength to the market is under 30, the bar is red. If it's in the middle, it's blue. If it's over 70, it's green, and you can adjust those in motive wave right here. But we're leaving them at 30 and 70, and you can see that Apple made a double top and then pulled back. So this is a really strong stock, and we're going to be using these bars from now on, and we're going to be looking for these kind of momentums, because look how much of a signal they give. As soon as they start, that green line moves up, you have an indication that the stock is behaving better than the market and is one to keep an eye on. So Apple is certainly one to keep an eye on. A pull back to this line tomorrow, to me, would be another opportunity to sell yet another short February put. Try to get about $7 for it if you can. ZI, this is the same bars here, the RSI bars, but look at this, we've got a down bar. So it really underperformed the market today, even though it lost 2%. Well, because it lost 2%, it underperformed the market, but it still did get held up by the 8 EMA. I might bail on Zoom Info because I read an article in Seeking Alpha. Not the greatest source of information, I'll grant you that. It's just one person's opinion, not backed by corporate research. But he had some good reasons why it was overvalued since its IPO. And even though it may be going to 50, it may take too long to get there for my liking. I may just bail out with the $500 profit that I've made. Square, on the other hand, had a terrible day, and it also had a red candle, so it performed under the relative strength of the market, and that's not a good sign. We're probably going back to test the 50, but I'm still in there and still rolling calls. NIO up a little bit, still has not closed this gap. Even if we took this here and we lowered it down to here, it's not only not closed its gap, but it's bounced off the top of this newly defined gap, which is this close here, followed by this low the next day. It's still got a gap to fill. It's still a stock that I like. I still got short 55 calls. I think I rolled them into next week to pick up another $1.20 or something. And I just continue to roll those calls. AT&T, let's look at Caterpillar. Caterpillar was mentioned in the threads, in the comments today by Zach. And look at this. This is is this our yearly Fibonacci's? Here's our yearly Fibonacci's. And you can see that we hit 138.2% last week and then pulled back. This is another Fibonacci set that we had. I don't want to spend too much time trying to locate it, but when we drew it, it had relevance, and now it's hit 178.6 of that extended Fibonacci, and it has completed that shark pattern, remember, and it did push up beyond the second target. Then it moved to 178.6 and it pulled back. If there's any stock that's going to do well with a big infrastructure play, you would think it would have to be Caterpillar. So keep an eye on Caterpillar. Today it went ex-dividend, which accounts for why it pulled back at least $1, but it ended up closing down 15 cents, even though it gave up $1 to the dividend. So that's a pretty darn good sign. Keep an eye on Caterpillar. That might be one that you want to sell call spreads on. You could buy a 190 call and sell a 200 or a 210. So if I do that tomorrow, I will tweet that out. What other stocks have we been watching? Dollar General, which we had taken off of our list, did give us an alert today because it fell below this point of support, but then came up to close the day right at that point of support. So if you were still long Dollar General and didn't get out today, that's okay. But if it drops tomorrow, time to get out. SONO, still moving higher. VERU, which we were waiting for it to break that bull flag, just not happening. At this point, it's too long. It's too old in the teeth. I would give up on it. FIS had a nice day today, up 1.92%. Let's take a look at its relative strength indicator bars, and it's our first green one, so it outperformed the market. If we get another one tomorrow, we might be getting a move up. This is a stock that you can see here had this outperforming bar here and then didn't do anything with it. Then it started to underperform the market, and that was certainly a flag. Here's an area where it overperformed the market and then pulled back. Another area where it overperformed the market and rose up a total of 125, 130, up $10, and then pulled back. So if you have Motive Wave, take a look at the relative strength indicator bars. I think they're pretty cool. CVS down. DGI, we already looked at that. One stock I want to look at now is called UTI, whoops, not $UTI, but UTI, which is United Rentals. And United Rentals would probably, oops, it's not 65 cents, so it's the wrong stock. So I will find what the proper symbol is for UTI tomorrow, for United Rentals tomorrow. Again, in an infrastructure play, a lot of companies will choose to rent their heavy equipment, and it's United Rentals that they would likely choose to go to. So I'll work on that for you tomorrow night.